Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, so let's just dive in and let's talk about a few things. So first off, how was everybody's weekend? Drop down in the comments below how your weekend was. Currently, right now, we are watching the price action within this market as we do range into, of course, the indice opening today. I think that with equities opening, I think that with the current, Bitcoin price action, we could ultimately see a nice retest of the lows before further, continuation upward. Now, of course, it doesn't mean that altcoins are getting slaughtered or anything like that. In fact, altcoins have been doing very well, as you guys do see on the 7-day span. Up 50 plus percent, 45 plus percent, all the way up to almost 100% on Filecoin, which is pretty monumental, honestly, if you think about it. But we definitely have been watching a little bit closely around like price action within this market, waiting to accumulate some nice low altcoins. XRP recently broke over like 40 cents. It was something pretty special. But ultimately, like right now, we are still in a bear market. This is the time where we want to take steps back and accumulate the trend, which means accumulate when we do drop down in price, sell when we do pump in price, and make money during a bear market. Doesn't mean that you have to, sit here and wait for, things to pump in 3 years. No, you could still trade the trend if you wanted to. Of course, do I advise by that? Not unless you are a very experienced trader. But yeah, I think that right now we are seeing some nice gains in this market. Some people have been taking a little bit of profit off the top because, again, like until Bitcoin breaks over a significant region, we are still very well in a bearish market. Now, it doesn't mean that we can't be bullish, and it doesn't mean that we can't accumulate, assets that we are holding long term, which I have been doing, and XRP definitely is one of them. Now, talking more so about XRP, I do have this tweet from myself, actually quoting Anders. I said, Ripple is so far ahead of the traditional/legacy system. They are true visionaries behind their technology. They know where XRP will be positioned and utilized. All you have to do is wait, be patient, and stack cheap XRP. Now, of course, this is a video from Digital Perspectives down here where they were actually talking about and addressing this, wallet pay app that basically they're utilizing, or I shouldn't say it's an app, but it's more so like a mechanism within like on-demand liquidity and a line of credit. It's the new feature Wallet Send. Proves the structure of this offering under the Reeves test. XRP is money, not a security. And yeah, it is. But also, like, this is a quote from Anders saying, at 220, basically breaks down how Ripple effectively solved the volatility issue of a customer holding XRP in a clever way. Huge. And here you guys have it. Like, Ripple funds your wallet with XRP. Here's the sender. You see like the sender XRP wallet to the XRP ledger to the receiver exchange, and all from there it goes to the receiver as well. But we do see the way it is solved is that a customer has a wallet with XRP, but they don't own the XRP until it's used. There's more. That also means that they, only have to pay the spread once instead of twice, as in the old model. Glad to see another creative way to solve a problem. Now customers can hold XRP without volatility worries and thus only pay spread once. Also, know that the end goal is for Ripple customers and hopefully others to hold XRP. That reduces available supply if there are wallets all over funded with XRP ready to satisfy international transactions. So this is a big deal to me. And honestly, yes, I actually look at this as a big deal. Remember, I just made a video actually talking more so about Q&T basically becoming unbuyable because of how many of like the customers that are utilizing Overledger would have to utilize and hold Q&T. And it's basically the same mechanism here, except for the fact that like people think that XRP, right, is not that scarce. They actually think that XRP is a very hyperinflated asset, if you will, because of the amount of supply compared to most assets. But honestly, this 100 billion, right? I know that people look at like the token supply and they're like, once it's over a billion tokens, they're like, all right, yeah, this is not for me. It's way too much supply. But on the contrary, the funny thing about XRP having that amount of supply is the fact that when you look at it and you look at their overall idea on how XRP would or should be utilized going forward, where they do have all of their customers, which is a significant amount of financial institutions and banks holding XRP to actually utilize or be utilized in terms of like international transactions, there's a large portion of the supply gone right there. Also, remember, on every single transaction, XRP or a small portion of XRP is burned. resulting in less and less supply of XRP being out there. And again, over time, we could definitely see XRP, having a significant amount less out there from the burn mechanism. But I'm more so kind of, dead set on, their customers holding XRP that could ultimately result in a very large portion of the supply being gone. And also, we do see over here Ripple Managing Director Cindy Young fields a price question about XRP in regards to its performance as a bridge currency. Listen closely. This is a minute and 36-second long video.
How important is it that XRP stays one of the top tokens for this to work?
Yeah. So, I mean, again, I would say we're not, really so much focused on the particular sort of price of XRP or the volatility or any other coin particularly.
That doesn't matter. It doesn't matter if it has a higher or lower market cap.
So if we look at our, again, on the on-demand liquidity solution, RippleNet, where we're using XRP as a bridge currency, right, to move fiat, around the world, right? That is, regardless of the price of XRP.
All that matters is how many there are. Doesn't matter what the price is.
It's a bridge that we are using as a bridge. So it's not, we're not here really to honestly like speculate and it's a means to enhance, a means to bring that efficiency to the market. So and again, I mean, when these things happen, obviously like prices drop, etc. For me, what's interesting is when I talk to one of our customers, partners, and the benefits they see, right? The customer, Asmo is a great example. So one of the big remittance companies, when they can enable their payments, I don't know, Filipino worker paying, from the UK, sending money to their family to pay for food or housing or hospital or whatever it is, and they can do that at a fraction of the cost. At that for me is where the big value is, as opposed to how much XRP is in circulation or not, and I mean.
Well, good.
And just to give you guys a quick insight, like the video was pretty low for me as well. Pretty rough quality to say the least, but it still kind of stays true. Like, a lot of people have been talking about like the price of XRP. A higher price XRP would benefit the on-demand liquidity solution, but it's not a necessity. I think that has been like the biggest concern around XRP's price, is that like just a higher price definitely is more efficient, but it doesn't really matter to them. And that has always been like the thing, like we've talked about this in the past. For me, where the value comes with XRP is like you have all of these major financial institutions, transacting on a day-to-day basis. Like remember, at the bare minimum, like a large portion of the financial institutions and banks out there are transacting trillions of dollars, a year. And of course, some are transacting trillions of dollars even a day. So when you actually think about it, the amount of volume that will, flood over something like RippleNet utilizing XRP as the liquidity source, that to me is just enough to actually account for a large portion of the, value of XRP being unlocked. Also, remember, Nostravato accounts being, $27 trillion. That is also something pretty significant. So to me, I'm not really worried about the price of XRP, within like the bridge currency on-demand liquidity solution. I think that a lot of people, kind of get caught up in the idea on like, all right, well, what would XRP be at if it did have this market cap? And of course, I've made videos on XRP in that sense because I do believe that going forward, XRP's price could be very substantial because of the technology around it. And I think that we are moving towards that as well. In fact, talking about that, we do see here Ripple saying crypto forward solutions free up working capital and remove the need for complex clearing mechanisms, opening new doors for instant payments across Europe. And of course, yes, like we've talked about this going back to like June 30th, for an example. They were talking about how the ECB is basically, ready, aka the European. I can't even talk now. The European Union and the United Kingdom more so taking their steps that they need to achieve like successful implementation of course, this groundbreaking technology, more so around like instant payments. Like we have been seeing a major spotlight being put on, instant payments simply because, of course, the efficiencies around it. Also, we need to usher into a new revolution of, payments in general and payment technology. And I do believe that Ripple will be one of those big names. In fact, down here, we do see the European, Commission is a key driver of instant payment solutions that help help streamline payment, service provider operations, including strategies that integrate technologies focused on furthering digitization and increasing payments efficiency. And right now, we actually have been seeing a major push from the ECB on, regulations, which I do believe that they are focused on this. In fact, down here, the European Central Bank, ECB, has long desired to make instant payments available to all EU PSPs. Several EU countries have prioritized state-level solutions for instant payments due to concerns around operational issues when scaling up to cross-border payments. This piggybacks on 2016's Payment Services Directive 2, which aims to increase competition in an already competitive payments industry, bring into scope new types of payment services, enhance customer protection and security, and extend the directive's reach. And the funny thing about this, right, is this doesn't mention anything about CBDCs, but we actually have been seeing a major push against CBDCs actually from the central bankers, because of course we understand why. We're going to be talking about that a little bit, but down here we do see the key supporting trends. The second movement is the rise of interest in central bank digital currencies, not only across Europe, but worldwide. Over 90% of central banks globally are researching or piloting CBDCs. This technology offers, myriad benefits, including, streamlining payments of domestic, fiscal policy. The Bank of England, Sweden's Riksbank, and the European Central Bank are all exploring CBDCs with a focus on data privacy and financial inclusion. Sweden, a highly digitized economy already, has seen a massive decline of cash use in recent years. As a result of proactive, research, Sweden has emerged at the global forefront of the CBDC movement. And of course, they do mention other areas around the world, which we've talked about in regards to, of course, XRP. But the funny thing about this is that we have been seeing a major shift, not only on regulations, but also putting a streamlined process on them. Down here, we do see, a deep dive into crypto financial risk, stablecoins, DeFi, and climate transition risk. This is from the ECB, the European, Central Bank. They're talking about, crypto assets in general. Financial stability risk, stemming from crypto assets are rising, and the crypto asset, ecosystem has become more complex and interconnected. Now, of course, a large portion of this you could possibly disagree on, especially if you are, in the crypto scene and you have been doing your research. For an example, crypto assets have been around for more than a decade without playing a significant role in the financial system, but they are growing. In 2008, they are talking about again, the creation of Bitcoin. Since then, numerous crypto assets and a complex and growing ecosystem, around them have emerged, spanning, subsegments and from stablecoins to DeFi and non-fungible tokens. Their explosive growth since the end of 2020 and increasing, interlinkages with other parts of the financial system have led to an ongoing global policy debate about the relevance and risk of crypto assets for the financial system. Now, yes, when we talk about this, I do think that they have been utilizing, the stablecoin issues around, crypto with, Luna, for example, as a major call for concern, and I think that they're utilizing that to actually usher in, regulations, but also them talking more so about cross-border payments and the financial sector itself, disruptions at the core. Also brings me to the next major thing, which is, of course, they are most likely going to adopt in crypto-driven use cases and CBDCs around this space, because they also do see the, efficiencies around it. They have done a full-on breakdown on this. They've talked about the efficiencies around it, and when we really kind of look at what Ripple has been, putting a focus on in terms of instant payments, we've also seen, major entities for example, the Federal Reserve actually, doing a push towards the FedNow service, which would be an instant payment service, which we've actually speculated and talked about it being connected to RippleNet within a liquidity source. Now, also the ECB economists, by the way, suggest limiting access to digital euro to protect banks. This is also a major thing. I do think that a lot of the things that we are talking about, in terms of digital asset adoption and a lot of the payment efficiency mechanisms that are out there, I think that a lot of them are being stifled greatly because of central banks warning and being concerned about them losing their major higher up within the financial sector. Remember, disrupting the core banking system, and cutting into like the fee system, which going back to even like this over here with like on-demand liquidity and line of credit, like this is disrupting core players around like the banking sector, especially like on-demand liquidity. So when we look at central bankers and we look at like even the ECB economists, they want to protect banks. They want to try to get rid of things that are disrupting the core banking system or the financial system, because again, like this is a monopoly system. Like there's a ton of money that is being thrown around in regards to like fees, that these banks are actually eating up, which we actually discussed this with Larry Fink. Actually, he was talking about on-demand liquidity, or I should say he was talking about a bridge currency to disrupt the inefficiencies around the fee base. And he was saying like, who does this hurt? It hurts the banks. We do see down here, like if the European CBDC is to be issued without limiting its quantity, the amount of digital currency in circulation would be much larger, potentially reaching 65% of the quarterly, real GDP in the euro area. That would lead the researchers say to a more sizable effects on banks' valuations and lendings. We do see the ECB economists have partially based their analysis on public statements by European officials regarding the design of the digital euro. In June, Panetta said the maintaining the total digital euro holdings between 1 and 1.5 trillion would help avoid potential negative effects on Europe's financial system and monetary policy. Funny thing about this is they understand that, when we look into CBDCs, they understand the efficiencies that it could possibly unlock. Down here, like we do see, Christine Lagarde remarked in an article that the investigation phase of the CBDC project will take at least another year, but also marks some key principles in the realization that they consider already clear. Wide acceptance, ease of use, low cost, high transaction fee or speed, security and consumer protection are the attributes that users would appreciate. The two bankers said, promising the digital euro will be a more efficient payment tool than cryptocurrency. The funny thing here is that they're talking more so about a digital euro, and saying like it's going to be more efficient payment tool than cryptocurrency. And to me, this doesn't make any sense, because you're not going to have a CBDC or a digital euro, if you will, issued without a ledger technology. DLT has always been spotlighted on this channel simply because I do see a major use for it. I think that the ledgers themselves, within like the payment system or the financial system, the efficiencies around them is what is going to serve their purpose, right? Like for example, the XRP ledger having the scalability, the security, the fees, etc., or even like Hedera, like all of those matter because CBDCs, if you do not have them issued on a ledger, it is the equivalent of having fiat cash just digital. You are still going to have the pre-approved payments, the pre-approved liquidity. It does not open the doors for financial efficiencies to be unlocked. You are still running on a legacy system, just in a more digital light, if you will. It's almost like having digital banking on your phone or utilizing a credit or a debit card. You are still in a very inefficient, society of finance. So to me, DLTs will play a pivotal role, and I do believe that they're actually wrong here, talking more so about how it is more efficient payment tool than cryptocurrency. To me, I think that we will be running on cryptocurrency-driven rails, without even knowing it. So a lot of individuals will be utilizing crypto technology without knowing that they are utilizing it. And I think that that is where we really kind of get to the point of like mass adoption around crypto technology. So with that being said, I hope that you guys enjoyed this. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all, have a beautiful day or beautiful night wherever you guys are in this beautiful world. It's been Nick. Peace out, guys.